All right, welcome back, everybody. Welcome to another episode of the Steady Wealth Podcast. A real treat here today with me is growth stock, really pioneer Louis Navellier, who I think for many people doesn't need an introduction. But uh, Louis, thank you so much for being here. Really appreciate it. I'm looking forward to giving people some insight into kind of your approach to growth investing and investing in general.
Yeah, well, I'm obsessed with fundamentals. I have an 8-factor model to score stocks. It's sales growth, margin expansion, earnings stability, earnings momentum, cash flow, return on equity, analyst earnings revisions, and earnings surprises. So we scored stocks in those 8 factors. Top 45% of stocks are looking pretty good now, although that's down from top 55% previous quarter. So the market's tightened up here a bit. We also are a pioneer in calculating what we would call good alphas. Alpha is the return the stock has independent of the market, and we do like stocks that kind of zig when the market zags. So alpha over standard deviation is my top secret indicator, and there you only got to be in the top 5%. So this is a very, very narrow market. So between our high alpha stocks and our fundamentally superior stocks, we go into earnings season locked and loaded. And so far, so good, but it's early.
It is early, and I would love to get to the current market here with you in just a minute, but just to kind of give people maybe a little bit of backdrop. You've done this for quite a while. Um, I'm just wondering if your focus on growth stocks and just your general quantitative approach, if the philosophy has evolved over the decades. I would imagine yes, but I'm just kind of wondering how it may have.
Well, it became more fundamentally focused as we got access to all the FactSet data that we could crunch, and we could back test variables. And then at the end of each quarterly earnings season, we back test our variables. We became more fundamentally focused. And our fundamental models are actually beating the pure quant models at this moment. That won't always happen, but that's where we are right now.
Yeah. So better access to data, something also, it feels like the playing field has leveled a little bit, at least in the raging bull market that we had. Not quite sure if that will continue at this rate. It seems somewhat improbable. If you were starting your investing career today, I know that may seem like a while ago. What would you do differently, if anything?
Um, I would probably go down a weird rabbit hole and try to figure out exactly what Citadel's doing because they jerk the markets around. We like to say there's 4 months of efficient markets, which is earnings season, which we're in the midst of right now. And there's 8 months of mean reversion. I've got a kid finished up a Stanford MBA, and he could obviously go work for Citadel if he wanted, but to my knowledge, it looks like they're usually using a mean reversion system to basically knock stocks down and create artificial liquidity. Looks like as things get more volatile, they unwind the position. I think it's nonlinear math versus linear math, so it makes it a little more complicated. But the other thing that's interesting about the market is, when this earnings season is almost over, NVIDIA will be the grand finale. And they write a lot of call options on NVIDIA. And so let's just say they go out and write $3 billion in call options. And of course, 42% of options are daily. The NVIDIAs, the Virtue Financial, the people writing all these options, they really don't want to fill them. So what they'll do is they'll run a mean reversion program to knock the stock down. So even if that's good news. So sometimes the tail wags the dog in this business. And so we got to keep an eye on that too.
Yeah, so I mean, obviously, your quantitative interest there certainly, is what I'm hearing. You would probably focus on that as well if you were to start over again. Um, I think, if I'm not mistaken, something like 80% of any given stock's move in any given calendar year happens through the four earnings reports, which I guess would kind of, under uh, agree with your sort of mean reversion commentary. I secretly wish a lot more people understood that. But
Well, it's artificial liquidity. Essentially, I'm pretty old, but we used to have these big spreads. And what they did on stocks is they squeezed the spreads over the last 47 years I've been doing this. And so as spreads got tighter, you have tighter inventory. But they try to create artificial liquidity just to stir the pot. And it seems to me reversion seems to be the biggest trick lately. But I like markets. I think the mutation in markets is fun. You never stop learning. You always have to check your data, And but when you can find that silver lining critical path, it's awesome. I will say that Wall Street likes to get stuck on themes. So, DeepSeek, in my opinion, was fake news meant to disrupt the markets. But I see a lot of deep seek related themes still going on right now. Obviously Nvidia can't sell its H20 chip to China right now. So I'm saying, well, somebody else is filling the need, and so I guess we don't need Nvidia. And that's all BS. You know what I mean? Nvidia has an incredible order backlog. But they float these things even today just to jerk stocks around.
yeah. Yeah, I mean, I think, and quite frankly, this is, I said before, the playing field's been leveled. I partially think there's some truth to that, but I think the other thing is social media has actually made things more difficult for a lot of people as well. Because to your point, there's a new headline floated every minute, probably, if you really were to get down to it. So it's really not very easy. But so it sounds to me like you would probably focus a bit more on the Citadels, and that, from a flow perspective, which is something I follow closely as well. That's certainly something.
Yeah.
That would make sense. In terms of the current market, just to kind of get into it here, you alluded to it before. As we're recording this, and this is mostly more to be more of sort of an evergreen kind of discussion. But I mean, I think there's always something to be taken out of any market chatter. In terms of the current market cycle, do you think that this is more of a risk-off cycle, cyclically at least speaking, maybe as far as U.S. equities are concerned, or do you think this is going to be blowing over here rather quickly? And of course, I guess that would have to be answered with to some extent to what are the Mag 7 stocks going to do from an index perspective.
Well, Mag 7's already off to a good start. I mean, Google beat, Netflix isn't a Mag 7, but it did really well. Apple's supposed to be okay this week. I think Meta will be fine, especially in the wake of Google's advertising revenue.
Mm-hmm.
So Microsoft's supposed to have pretty good results. So yeah, I think the Mag 7 gets mojo back just a tad. I think, the biggest problem we've had in the markets is the foreign media has been incredibly negative about America. And most of this is emanating from Britain, the Economist magazines, the Financial Times. They're also very pro-China. China's been investing billions in the British infrastructure, Heathrow Airport and Thames Water, things like that. So basically, for lack of a better word, the Trump bashing and the bashing of America has been going on. And what we call the bond vigilantes, the big institutional investors, are really in control right now. And Howard Lutnick and Scott Bessent had a little meeting with Trump not that long ago, and I think they told him in a nice way he's not in charge. The bond vigilantes are in charge. So we got to do something. So they suspended the 90-day reciprocal tariffs, and that triggered this probably the biggest rally I'll see in my lifetime on April 9th. We've retested those lows in live volume, so I don't think we have to retest. The other thing that I find just unbelievably amusing is a week after that August 9th reversal, the Truth Social announces they're getting in the money management business with Trump-themed portfolios. And then in the same day, Laura Trump and Donald Jr. bought a big interest in Salem Publishing. The stock surged 260%. And Salem's religious right radio stations, but they're also financial newsletters. Same business I'm in, but they're Eagle Publishing, and I speak at Eagle events like Freedom Fest. So it's really interesting. So it's I think Trump has to make the market go higher. It's he's in the business now, and then it's funny. I saw Charles Payne at a conference, and he was telling us that that in the Trump 1.0, the first term, that Trump used to bug Larry Kudlow all the time for what the market was doing, and so I think they want to juice the market at this moment. It'll be fascinating to see. I'm expecting a collapse in global rates. We've had 7 ECB cuts. We probably got another 3 coming. I think the world's biggest challenge is a lot of the world is shrinking. They have fewer households. The only countries that are really growing are us, India, and a little Brazil. Brazil's about to stop growing. So when a country doesn't have household formation, and a lot of bad things can happen, you can counteract it with productivity increases. Japan has done that, but I think the U.S. will emerge as the oasis for the rest of the world, and we'll continue to attract capital. But we're waiting for that switch to happen, because as you can see, the dollar is very weak this year.
Yeah. I mean, in terms of sort of on the sort of, I guess, intermediate term timing of all that, one of the things that we're currently circling is sort of like, as you head towards midterm elections, you might have to, kind of juice the market a bit more, to use it to borrow one of your terms there just a second ago. I do wonder though, as a growth stock investor, do you see that, when I talk to hundreds and hundreds of people all the time, and both on the retail side, institutional side, RIAs, I hear of pretty much no one that's sold any Max 7 stocks. And given the concentration, do you feel, and I know Max 7 is, I don't want to make that sound like synonymous with tech, because it's just set. I mean, they're huge companies and great companies, but do you see that tech sort of led, rally in the S&P to continue, or is that more of a consolidation phase? And then even just from a market cap perspective, I'm just kind
I
of
think
wondering.
it's actually broadening out a bit. You see Netflix beat. You got Palantir. You got AppLovin. You got a lot of very strong stocks outside the Mag 7. We do have legal monopolies in America, rightly or wrongly, and the Mag 7 are legal monopolies. And you can see the Justice Department's trying to break up Google now. But when they got the judgment against Google, that's like a dog catching a car. Like, now what do you do? Yep. So, there's events these companies need. I talked on Navellier Market Buzz about Apple. Obviously they're going more to services, but what really Apple needs is that folding iPhone. They've signed the contract with Samsung Display, so the tech experts think it's next year, not this year. But yeah, I guarantee you, when Apple introduces that folding iPhone, it'll probably sells it for $2,500. It'll go nuts. So there'll be events that trigger things. I mean, Microsoft's got pretty good sales and earnings right now, but they could say their investment in ChatGPT is starting to pay off. Things like that will help.
Gotcha. So you're not concerned about Max 7 any significant?
No, not really. It's just Scott Bessent, our Treasury Secretary, said that's the problem. There's not a problem with the economy, there's a problem with the Mag 7. But he was looking for excuses. And his job is to control the bond market and manage the Treasury auctions. And so far, Scott's done a good job. And he's a very good spokesman. He's better than Howard Lutnick, who I know personally. And of course, we got to keep Peter Navarro locked up.
There seems to be a lot of common thread there across certain people I speak to as well. What do you think? Being able to see through noise, I think, is probably one of the those traits that makes a successful investor. And right now, we arguably have a lot of noise, at least in terms of headlines. How do you tell people how to navigate something like this?
Well, I just tell people that to basically we live in a world of Google Analytics. I'm in the newsletter business, and only outrageous things get hits. It doesn't matter whether it's sports or entertainment or politics or even finance. You want to hit on the internet, you gotta say something outrageous. I had an article for Market Watch. They call me to write articles. It's funny. So does Barron's. So I write these articles, but Market Watch changed my headline to get more hits. And article was trending for like 4 days, ended up on Apple News, and they had to have a negative headline on Trump to get more hits. But that's the world we live in, and fear sells better than greed. And there's a lot of services out there telling you that the world's ending, and obviously gold's doing very well, so they can that helps. But I just think people have to take a step back and realize that America's going to win for a variety of reasons. One is demographics. We're younger than most countries. We're pro-family in the South and the Mountain West, and when you create households, you create organic growth. That's why Utah is the fastest growing state in the country, has been for a long time. We assimilate our immigrants. They're not doing that in other countries, and we're not anti-immigration. At least the current administration is. They just want them to have work visas and pay their taxes and all. And then finally, our states compete with each other, and that's very unique to America. That our states are out trying to do each other. So I think we have a better model than the rest of the world. China is the new Japan. Their rates have collapsed. They're in the midst of a demographic decline. President Xi can't even travel very far because he's scared when he comes back he won't be in charge. So he's got his own internal problems. Trump said they might meet in May, but I don't know if Xi can go very far.
Maybe Trump has to go over there.
Yeah, he's so scared that there'll be a coup or something. Of course, he's got rid of all the competent people underneath him in government. What we call the reformers.
Yeah.
So we're just better off, and I think it's important to ignore the British media. They're manically depressed. Of course, they control. The British is a country that has censorship, and Kirsteimer's trying to crack Apple iCloud. That's one of the fights we're having with Britain, because if they get access to Apple iCloud, they can see who said nasty things about the Labour Party, and then they get to go to jail for 7 years. So, we got to realize that's not a good model they have over there. Half the country can't pay their electric bill; they have to be subsidized.
Yep.
So it's interesting. I think the EU is probably going to break up. Also, and it's very dysfunctional. Brussels is trying to control elections, ban candidates. Romania, France. They got one of Maloney's associates the other day, and it's this was supposed to be a monetary union, a trade union. It's turned out to be a Brussels trying to run all these countries, and that's not healthy.
I think one thing with Europe is I think what is underappreciated in probably the U.S. media is the fact that there's very different cultures. So you have some country like, say, all the way in the north, like that's very different than Italy, right?
Yeah,
Even within Italy, northern Italy and southern Italy, it's like different cultures, right? So whereas in the U.S., yes, of course, west, east, different, south, north, but for the most part, it's much more together, and it's the same language, which helps.
Sure. Yeah, Maloney's been the great spokesman. I have to say outrageous things to get hits on the internet. And early in the year, I said there'd be 4 rate cuts, and because we'd be following Europe lower, and I'm still sticking by that. But since CNBC confirmed that might happen, I had to have another outrageous statement. So my latest is that Italy's going to be the 51st state. But first we have to have the EU break up.
Well, given Trump and Maloney's White House meeting the other day, that's an interesting headline. Right?
And don't forget, Elon loves her.
Elon and her, he does, and it might be mutual. They
love each other, so there's some chemistry there.
That'll be interesting. Just quickly on macro now. Just you touched on the lower rates. Obviously, you're talking about the short end of the yield curve for people who are not familiar with that. Long in the curve, we could probably argue whether anyone's in charge of that anymore. But on the short end, so you do expect some rate cuts, and if that were to happen, how does that fold into kind of your posturing? And I don't know what it is on, let's say, inflation, higher for longer or not, and then ultimately tie that well right back into growth stocks.
The last I looked, we had deflation last 2 months CPI. We had the PPI collapse in March, and we have the lowest oil prices in 4 years. Although I'm in California now, they forgot to cut gas prices here as they shut down all their refineries. But other than California, it's that puts more money in people's pockets. I think that's what really got Trump mad at Powell, because Powell was anticipating inflation that hadn't materialized yet. And all the data says, deflation. Every economist is trained to fight deflation. They dumped all these goods in America. If our GDP is negative in the first quarter, it's due to all the gold dumping. That's supposed to be 2.1% impact on GDP because they just dumped gold on America. And then they dump goods. So we got to move all that stuff now. So, America will discount it to move it. I think the only thing Trump's fighting with, he had a meeting with some retail executives last week, and you don't want empty store shelves. That would be his opposition would use that to embarrass him and humiliate him.
So is the inflation or the disinflation, at least that we have, is that that's obviously happening and it's more near term. Do you have something of a vision beyond, let's say 12, 24 months? Is there anything there that you see different in that
picture? I think the dollar gets its mojo back, and I think the dollar is so strong it offsets the 10% tariffs that are uniform. The reciprocal tariffs on top of the 10% looks like they've collapsed everywhere except for China.
Right.
And in the end, we'll have freer trade in the end. We just had to call their bluff and guilt them to buy something American. It's interesting about America, as big as our ag sector is, we're actually we're importing food now. Most of it's from Mexico. Berries and tomatoes and, obviously avocados and stuff. So they did slap I think a 21% tariff on tomatoes or something, but we should be the breadbasket of the world.
Yeah. Two more questions I have for you. One of them is just in terms of the growth stocks, just because then that is your real, what you mean a name with. Are there any emerging technologies right now or industries in sort of the growth parts that you personally are sort of most excited about for the next 5 to 10 years?
The newsletter world pumps small modular reactors. I don't invest in any because no one makes money. No one has one yet. I mean, I know Glenn Youngkin, he announced that they're going to do one, but it's everybody's scared it's going to blow a hole in the earth or something. Once somebody makes one, they start to. The next question is, when are you going to make money? Right. So that's a theme that we don't like. Quantum computing, I've written a lot of reports on that. That's really coming more from NVIDIA, because NVIDIA has 2 more generations after the Blackwell chip, and then after that, they really can't make their chips faster because they're actually approaching the atomic level. You can't split atoms to make a chip, So then you have to go to quantum computing. NVIDIA is trying to control the language, the programming code. And that's why they've had these quantum computing contests, and they have a quantum cloud simulator. And, we've written a lot of reports on that, and we'll only buy the stocks if the clients want it because they don't earn money. But some do have some good sales growth and are attracting capital. So that will be interesting, although Jensen at NVIDIA says those won't make money for a while. So, but yeah, we keep an eye on everything. When you can find something that goes from negative to positive earnings, it's very exciting. And I'm sure I'll be all over those quantum stocks, but I don't know if that's going to be in 7 years or 15 years. I don't know if I'll be alive to see it, so so that's another thing. But, again, I only buy things when they make money.
Yeah. No, I think that's very smart, because otherwise you get sometimes a bit too much volatility. Last question for you. There's a lot of people that are new to investing. And when I say new, I've done this now for 26 years. I know you've done this way longer than I have. Seen a couple of cycles. I was talking to a boardroom full of hedge funds the other day in New York. And I was trying to kind of do the math for them that the average age on Wall Street is about 35, which means no one has seen a cycle. And the average age of the baby boomers is 70. You subtract a 15-year bull market, you get someone who's probably never seen a cycle since they've really been looking at their money. Having said all that, are there any major sort of investing nuggets, or one nugget actually specifically, that you would give to someone who's only seen one raging bull market since 2009, and how to deal with that once we have a drawdown or whatever?
Well, I have 2 insights. One is the stock market is a manic crowd, and crowds aren't smart. So anytime you see a sell off, you just wait for the volume to dry up. Then the market will reverse and has to go back and retest the lows. It's human nature. So, if you buy after the retest when volume dries up, that's a good interest point. My other comment is please be careful of spreads. Wall Street loves ETFs because Wall Street makes more money on spreads than they do on management fees. I know I've got friends in the mutual fund business converted all their funds to ETFs, and they're just shocked how much they're making in spreads now. So let me try to put this in perspective. Bespoke has documented that if you bought QQQ at the opening and sold at the close every day for 40 plus years, you lose 53% of your money. In other words, the daily spreads are bigger than the daily performance. On the other hand, if you bought at the close and sold at the opening, you're about 2,300%. If you just bought and held, you're about 900%. So Wall Street is always innovating, always creating these kinky products, and always trying to fleece you on spreads. And I feel sorry for a lot of financial advisors because they're trained to gather assets for the mothership, and then the mothership fleeces people on spreads. So I'm not anti-ETF. I had my own ETF, although I closed it because I was shocked by the spread. But about 15 years ago, I was on all these managed account platforms. I sold that business, but all these firms are, Louis, you got to do ETFs, got to do ETFs. Well, there's a kickback from Citadel, and what an ETF does, it puts a spread on someone who has the spread. So it's like getting a double scoop of ice cream. So they literally push people to do ETFs so they can fleece people on spreads. And that doesn't go to your financial advisor, but that's going to the firms and the ETF firms themselves. And that's why and ETFs are getting, they're better now because they're priced daily and they're adjusted daily. But oh my, that's why you got such goofy people in the business. It's just because, let's say I take over Kathy Wood's portfolios, and if I lost 80% of the money, they would make more money than they double the money because they get there's a spread model there. Yeah. And so people have to understand that and not just jump on every trend they see, because and you can go to morningstar.com, key in your ticker symbol on the ETF and see what your spread is. They'll be tighter at the opening, they'll be tighter at the close, but in the middle of the day you can just drive a truck through it. And you got to be really careful.
Yeah. Well, Wall Street is the best selling machine that I know.
Yeah.
And if there's one thing that I totally, love your advice there. I'll say this: when I left JP Morgan after the financial crisis, we spent about 2 years trying to unload our books of, swaps and CDS and everything we had, when everyone was still ready to buy it. And right now, as we also have an investment advisory firm, I'm getting probably daily, maybe 2-3 emails a day from all the private equity firms telling us that they're now open for business for retail. So we'll see how that plays out.
I got a kid in the private equity business. And then the other interesting thing is private credit's huge now, and they're leveraging that debt. And it's $2 trillion. It's probably headed to $3 trillion. But I'll tell, this is a good thing to close on. Back in 2008, I lived down in Palm Beach, and people are bragging to me that they're earning 13 to 16% of your tax free. I'm not possessing these people. They just come up and tell me how smart they are that they can earn 13 to 16% of your tax free. So I got really curious about this. So I went to one of the presentations. It was Citibank, and the head of alternative investments was giving this speech, and they buy AA rated munis, but they leverage it 6-to-1. They were using the AIG's credit default swaps. So that's how they were earning their 16 to 18% of your tax free. The problem is when the credit default swaps broke, because AIG failed, they had to unwind them all at once. So when Wall Street sees you coming, they drop the bid. So those leveraged muni products that they were selling through Reg D partnerships ended up losing 97% of their money. And the guy that did the presentation was a guy named Jack Liu. And
Sure.
And he got fired because he lost $21.1 billion for Citibank. and then he became our Treasury Secretary. So when you turn on CNBC, yeah, and I'll see Jack Lew on there, and Peter Orszag runs Lazard, and he's another one. There's some really dirty, nasty, horrible human beings that they pump, and so be careful.
Be very, very careful. I fully agree. And then the volatility aspect too. You speak about, spreads. I remember this was in '07, heading into '08, going to the CDO squared. And people that know what this is, it's a collateralized obligation, but that buys other CDOs. And I remember going to the quant trader, and he said he can't price anything anymore because the volatility is too high, and his models blew up.
Yeah.
So I guess, the other day on a webinar, the most requested ticker was something called ticker symbol MSTX. I didn't know what it was. I had to look it up. It's a 2 or 3 times levered version of MSTR, MicroStrategy stock. So, you look at that thing, and it collapsed 98% when there's, it's got a vol of 200%. So I think a lot of people need to be careful of volatility and understand.
Yeah, we're going to have another flash crash one day. The last bad one was 15, but I still remember that. And what it was is we hit circuit breakers and stocks couldn't open, but they kept the ETFs open. So most of the ETFs gapped down that day because the stocks couldn't trade. So they most of them had at least 35% spreads. But the ETF I still remember is DVY. It's an iShares dividend ETF. Should be safe and everything. Anyway, it gaps down 34.95 that day. It stays there for like 90 minutes. And, well, I think a little longer than that. But anyway, at the end of the day, it's unchanged. So, that's why I like to tell people markets aren't liquid. I mean, you can sell, sure, but you're going to get fleeced. Yeah. And every time I start to explain spreads to people, they get very upset with me. And we had that. I had some clients that have Trump derangement syndrome, and they had to get out. Or my cash, I said, "Can I sell on the strike?" No, sell me out now. I said, "Okay, you're going to get fleeced 6% on spreads, middle of the day,
Sure.
So, well, it's so what? Be careful of the spreads. Okay.
Be careful of spreads, and understand that markets don't always go up. You've got 15 years of a no volatility bull market. We do have cycles, and
people like me wait for trade. There's windows to trade in. So we normally are selling in the strength, and we're normally buying on dips. There's a natural market oscillation out there.
It is a very market natural oscillation. So it's I think people have to learn not to panic once there actually is a reason to panic.
Yeah.
It'll kind of be too late for most people. But Navellier Market Buzz is, I think, where people can find you on YouTube. Mm-hmm. There's a lot of free stuff, including a link to find more about your latest book.
Stock traders are free. We have something called Navellier Market Mail. Our commentary is free. So if you go to Navellier Market Buzz, it comes out every Sunday. Myself and my daughter do it. It's but at the bottom of it, you get all the links to all our free stuff. So take advantage of it. And we're just out there to empower people and help people.
Love it. Free stuff. Louis Navellier. Navellier Market Buzz. Just key that into YouTube. Louis, it's been a great pleasure. I really appreciate it. I know you had to get up a little earlier than I had for this, but thank you so much, and all the best to you.
Take care.